In the early 2000s, we saw a huge boom in the housing market primarily because of three things. Number one, we saw the boom of ninja loans, NINJA, which stands for no income, no job, no asset loans, which means if you don't have a job, you don't have any assets, you don't have any money, but you wanted to buy a $300,000 home, normally the banks would reject you. But you could go to the bank and say, hey, bank, I want to buy this $300,000 home. I just don't have any money or any job. Can you help me out with that? And what would the bank say? Absolutely. All you got to do is sign the dotted line right here, and we will give you that check so you can buy the home. Now, your next question might be, but I don't have any money for a down payment. I know you require a 20% down payment. Is there anything that you could do for me? And that's where banks would say, absolutely. We can help you with that because we have 0% down payment mortgages. So now, if you didn't have any money to buy a home and you didn't have an income, still no big deal because now banks would give you 100% mortgages. In fact, sometimes banks would even give you 110% loan to value mortgages, which means you wanted to go out and buy this $300,000 home. You didn't have a job, you didn't have an income, you didn't have any assets to put down as your down payment, but you had closing costs, you needed some furniture. Well, the bank might even extend you a $310,000 loan. That way you had $10,000 to cover your closing costs and your move-in costs, and now you move into the home. But then your next question might be, but what happens now if I don't have a job and I don't have any money for a down payment, but I also have a really bad credit score? I have a 600 credit score because I've been behind on my credit cards. Can I still get approved for a mortgage? And that's where banks said absolutely, because we have something called subprime mortgages. Subprime mortgages meaning a special type of loan created for somebody who doesn't have a very good credit score. So now when you couple these three things together, what happened? We had people buying homes who shouldn't have bought homes. And bankers were incentivized to sell homes to people who maybe shouldn't have afforded homes because bankers are paid on commission. Now remember, bankers are in the business of selling you mortgages. People wanted to buy homes. Who do you blame? Well, some people blame the banker. Some people blame the people. At the end of the day, you have to take personal responsibility for yourself. The bank's in the business of making money. They're going to always try to sell you more. And there really doesn't play any benefit of blaming either one or the other. You have to understand what's going on. That way you can take care of yourself financially because, yeah, the bankers were doing greedy and bad things. Consumers were also buying homes that they shouldn't have bought. So there we go. We had these people buying homes who shouldn't have bought homes. People are buying homes. Bankers are making money hand over fist. And now the bubble starts to get created. And then eventually the bubble started to burst. Now, the reason why the bubble burst here was because partially due to the fact that we had a lot of adjustable rate mortgages. People were buying homes without having any understanding of what they were buying, but many times they were buying these adjustable rate mortgages, meaning for the first few years of you entering this mortgage, you would get a subsidized mortgage rate, a lower mortgage payment because you got this adjustable rate mortgage. But what people didn't understand was that 5 years into their mortgage, the interest rate you pay would adjust based off of where mortgage rates are. What bankers said was, hey, if interest rates go up and you can't afford it, don't worry. Just refinance into a cheaper interest rate mortgage or sell your home. You're going to make a lot of money, so it doesn't really matter. But no one really talked about what happens if things go wrong, because that's what happened. Interest rates went up, and now people went from paying $800 a month to $1,500 a month. And now all of a sudden, a homeowner said, wait, I don't have an additional $700 a month to continue making my mortgage payments. I'm already living paycheck to paycheck as it is. Let me go and refinance. That way I can pull my cash out and continue making my payments as it was. Well, when interest rates started to go up, home prices also started to go down because people also started selling more homes and people were not able to refinance, because they realized that they were underwater on their homes. And then when they went to try to sell their home, they couldn't sell because the home values were lower than what they bought it for. Now people were stuck. They can't afford the monthly payments. They're underwater. They don't have any equity. Now what do? And that's what created this huge wave of foreclosures, and that's what caused the bubble to burst. So now going into the analysis of what actually happened, the first P was the panic. We had Lehman Brothers collapse in 2008. And then Fannie Mae and Freddie Mac collapsed. And then the entire financial markets were on the brink of collapse, which brings you the first P, panic. Then, people thought that the financial system here in America was going to collapse and never recover, partially due to the fact that the media kept reporting of how bad everything is, and so people sold. And then you had all these fancy financial derivatives that were also being sold, and the stock market got crushed. And then foreclosures forced people out of their homes as banks tried to sell out of the inventory as fast as possible, and that led us to the first O, overselling. The result of this overselling was that we saw stocks fall by around 50%, and we saw real estate prices fall by 40 to 90% in some neighborhoods, which created an amazing buying opportunity for some people while everybody else was running away. This brings us to the second O, which is opportunity. By 2009, the stock market bottomed and the stock market recovered by 2012. The real estate market bottomed in 2012, and then it took a number of years for it to fully recover. But the people that took advantage of that opportunity were then able to profit because they had the patience, hopefully, to ride out now the recovery and then the growth. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.